So much for the rally. Yesterday's recovery in stocks is fading fast. European shares are selling off, as we've told you, and futures are down this morning, and that is a surprise to our next guest. Nicholas Colas of BNY ConvergEx says stocks are oversold and figured the bounce would last for at least a few days. Nick is chief market strategist at ConvergEx. He previously was a portfolio manager at SAC Capital and Silver Capital Management. Nick, welcome to the Inside Track. What happened? Why do you think we're not seeing more follow-through?
Well, we were expecting to see some kind of bounce, and we began to see one yesterday. We've been selling down for 6 weeks now, and 6-week sell-offs all in a row are very unusual in the stock market.
Yes.
Only a handful of times back to the 1970s. And so when you look at that kind of trading pattern, you think there's some reversion to the mean coming up. The week's not over, so let's not toss in the towel just yet. But certainly today's market action doesn't look all that promising for Wednesday.
Oversold means different things to different people. How do you define it?
Oversold to me is any time you begin to move around and move through traditional statistical measures of market action, such as the 6-week rule. You get so few consecutive 6-week periods of down moves, and if you look at the history over the last 25 years, when you see 5 or 6 down weeks, and 2 out of 3 times, the next 5 or 6 weeks are up. So we do have some history in our favor over the medium term.
What are investors waiting for? It's not like there aren't some aggressive investors out there. Look at the pricing of the Pandora IPO, for example.
Yep.
What is everybody else waiting for other than the internet IPO frenzy?
Yeah, well, we've got 2 things we're waiting for. If you're a technology investor, you're looking for growth. Growth is so unusual, so uncommon, so hard to find in this market because of the sluggish economic recovery that anything that grows quickly has a lot of fans. So that explains that bucket. The other bucket is waiting for a more statistically valid jobs recovery in the U.S. because we're not getting that. We're seeing an initial claims number. We're seeing it in the Friday reports. Jobs growth is really slowing down. That's a big concern to people. I think it's more than half of this entire move down over the last 6 weeks.
So a catalyst could be Thursday's initial jobless claims number?
It certainly could be. I tell you, the last couple of weeks have not been very heartening. You're looking at jobs, initial claims well over 400,000, not a healthy level to be at and not indicative of a particularly strong market for jobs.
Do you think it's possible that stocks could be stuck in a tight range until we start seeing some of those second quarter earnings reports in early July?
I think it's entirely possible. Analysts who cover the major companies or the major indices are still pretty optimistic about revenue growth and earnings growth for the second quarter and for the back half of the year. They haven't seen and heard about it, the kind of slowdown that the market's worried about. So if companies can come through with solid earnings, which they have for the last 2 years, and show some positive revenue growth, then I think we have a better, more balanced recipe for an expansion of the market.
But the macro picture remains very uncertain, right? I mean, look at what happened yesterday. One of the more interesting things to have taken place yesterday, and we're only talking about one day, is this repricing of treasuries. All of a sudden, treasuries backed up. The 10-year treasury yield backed up to 3.1%. It's only back down to 3.08. Just 2 days ago, we were sub 3, and yet stocks are selling off. Where did that money go? It came out of treasuries, but it didn't go back into stocks.
Money is very twitchy, and you can see this across a whole range of asset classes, not just domestic assets like stocks and bonds, but really overseas as well. I think that the rally in treasuries is one of the great mysteries of the capital markets so far for the year. Because if you had told everybody, okay, QE2 is ending in June, and the economy is going to be basically okay, who would have bought treasuries? And yet we're sitting at really, lows for the year in terms of yield.
Nick, great to have you here in the Inside Track. Please come back soon.
Thank you
so much.
Nice
to see you. Nicholas Colas of BNY ConvergEx.